Ahead of the Precious Metals Investment Symposium being held in Perth on the 3rd and 4th of October, we're joined by Bron Suchecki, Precious Metals Analyst. Bron, can you tell us, why should central banks and governments hold gold?
Thanks, David. The reason that central banks hold gold is very much similar to the reason that investors hold precious metals. It primarily, from a government point of view, it's the insurance aspect of precious metals. Now, investors hold precious metals also for portfolio balancing, diversification, purely investment speculation aspects. But there's that insurance aspect in an economic crisis, world sort of crisis, that people rush to gold and gold holds its value. And that's one of the primary reasons central banks hold precious metals. If you think about it, if there was God forbid, a world war, if a country needed to buy warplanes or other really essential items, you can imagine with the distrust going between governments that they're not going to take paper money. They're going to say, I need a hard asset. And so gold in that sense acts as that real hard asset in those extreme circumstances.
Going back hundreds of years, was gold used to protect against volatility?
Yes, a long time ago, gold really was the base of the monetary system. So it actually formed the base money, as they call it, the hard money, off which the rest of the economy and the currencies and credit was based. When we moved off the gold standard in the 70s and 80s, a lot of central banks started selling holdings. A lot of central banks kept their holdings. The reason for that shifted away from it being a currency and more to that insurance reason.
You touched on that in the 80s things changed. What impact did the selling of the gold by central banks and governments have on the gold price during this time? And what steps needed to be put in place to stabilise the gold price?
Yeah, it's interesting. I think after the gold had its spike in 1980, what you see is total, globally, central banks, the amount of gold held by central banks was stable. And then in the late 80s and into the 90s, it started to fall. And so various central banks, not necessarily coordinated, were just selling off bits of their gold holdings. Australia famously did that. It sold 2/3 of its gold in the late 80s. And the rationale for that, I think, was very much that the world had moved a bit off from the gold standard. Also, I think there were a new sort of group of central bankers coming in who are more versed in sort of portfolio investment sort of theory, and they wanted to diversify their holdings away. And so what that did is just put a weight in the market of a constant supply of metal. And to the point that really psychologically for the gold market became very detrimental. And the gold price, if you look at the chart, it just started grinding its way down, all the way down to $250 US an ounce towards the end of the 1990s. And central banks, whilst they were selling, were still holding large amounts of gold. So it got so dire and the market was so pessimistic that in 1999, a group of central banks, mostly European central banks, actually sort of put out a statement and agreed amongst themselves to limit their sales to 400 tonnes a year maximum across these 14 different central banks. And that was a way to say to the market, hey, look, we're adjusting our gold holdings, but we're not going to get rid of all of it. And it did have an impact. The price shot up from $250 to $330 in response to that. It then grinded its way back down again before it bottomed. And then that's when the bull market sort of started, or the stealth bull market started in the early 2000s and on its way to $1,900 in 2011.
During the latter stages of that period, did emerging companies who were aggressively buying gold start to impact the gold price?
There wasn't so much, I don't think there was so much emerging market buying. It was a net selling. If you look at it globally, the total amount of gold held by central banks declined from about 36,000 tonnes to 30,000 tonnes. It was a real consistent selling and drop. So it really was the Western central banks driving that. And it wasn't until much later, particularly the global financial crisis that sentiment turned around.
In recent times, we've seen a change in the way central banks and governments are viewing gold. What impact do you think this change will have on gold prices moving forward?
Yes, there has been an actual significant change in holdings. If you look at central banks, there's a chart that I have that shows the total amount of gold held by central banks, but it splits it out into two different groups. And the first group is China, India, Russia, Mexico, Kazakhstan and Turkey. And if you look at those and you pull them separately and you look at everyone else, you see that in 2008 and the financial crisis, there's this change, a significant change where all the rest of the banks were completely flat and stopped in a group, as a group, stopped selling. So they stabilized their gold holdings. And then the ones that I mentioned, particularly China and Russia, started accumulating. You can see there the main ones that are behind the growth in gold held by central banks. So I think what's happened is that the financial crisis has actually reawakened central bankers' awareness about the instability of the financial system. And as a result, they've stopped selling gold as a group and are stabilized. And then these key, and obviously it would be of not coincidence that China and Russia, who are particularly concerned, I suppose, about the dominance of the US dollar, are starting to accumulate gold, I suppose, as a way of rebalancing their reserves away from the US dollar.
So the big question is, moving forward, should central banks be holding gold?
I think there is a reason for them to hold gold. I think it makes sense in a totality for them to hold it. Some central banks may be overweight and some may be underweight. And I think that's what's happening. If you look at China and Russia, they obviously feel underweighted, and they are if you look at it as a percentage of their reserves. So they're trying to rebalance and get a bit more gold into their total reserves, not just holding currencies. So I think there is a case for it, but I'll explore that in my talk on the Precious Metals Symposium.
Bron, thanks for your time, and we look forward to your presentation at the Precious Metals Investment Symposium being held in Perth on the 3rd and 4th of October.
Thanks, David.